back, traders. In today's video, I want to make a follow-up analysis on my previous video where I forecasted that gold is heading towards 3,800 market spot price. All right, so as of the time of my analysis last week, gold was somewhere around 3,320, and I forecasted that gold was going to be bullish all through last week, and indeed it was bullish, and we're able to smash our first target of about 1,200 pips right here. Okay, so but then we still have about 5,000 pips to go. Following me, this is the best time to subscribe to my channel, hit the notification bell so that you can get updates on my analysis on gold, because I'm going to be dropping analysis from time to time to follow up on what market is doing. All right, so today I want to share with us something very exciting and very important to note. Doing my analysis on gold, I was able to spot a concurrent chart pattern which I would like to describe as the footprint of financial institutions in the market. So, and it is this pattern I want us to pay very close attention to, because it's something that is repeating itself over and over again in the market, especially within this price period. So here is the pattern. So by the way, this pattern, which is a bullish flag, is the major character for our bullish configuration. Okay, I already made analysis about this pattern, so if you would like to check that out, check the link in the description. You will see the full analysis on gold, so check it out. It's very powerful, very informative, and the bull run is just starting. All right, so check out this pattern. Note that I didn't pick this structure from this low. Instead, I picked from halfway, and there's a reason for that, so I'm going to show you the reason shortly. So we have this stretch up and the price pulled down to form this hem shape. All right, to form this hem pattern. All right, so now this hem pattern already created liquidity around this zone, and we have this little pull up and we swept the liquidity to the downside. All right, liquidity swept, hem pattern completed. So now we have the same M pattern in like reverse form, like W now, but I would not want to focus too much on that, but just follow the screen. All right, we have something like this. Okay, as you can see, it's like the inverse of this M pattern. So it also pulled back a little bit, then we swept this liquidity to the upside. So I will stop this right here. So to show you this pattern for the second time, I will pick the price halfway, just like I did here again. So price started from here, pull up, move down a little bit, then form this M pattern, then we have this little pull up, then liquidity sweep. All right, we have this liquidity, then we saw the liquidity, then price pull up again, pull back, we form this W pattern. You can see this is full W, like W is not actually W, but we can call it maybe reverse head and shoulder or something. All right, this is more like reverse head and shoulder though. Yeah, not W, reverse head and shoulder, because you have the head right here, you have this left shoulder, you have this right shoulder, and you have the neckline. So you can call this reverse head and shoulder, but in any case, just focus on the M pattern. So I will again stop this structure right here. So for the third time, I pick my drawing tool again. I pick the structure from here up here. The price came down again, pull up, down, up a little bit, then we sweep the liquidity to the downside. You can see the liquidity right here. Okay, so now that is the third time consecutively. So now, as we expected in my previous analysis, okay, we expected that after the liquidity swing to the downside, we expect price to pull up, then come down, then we have this bull run. Okay, which was exactly what happened. So price actually went up to this area, so we have it here, and we have this sharp fall because they didn't want us to like catch what they were doing. But fortunately enough, we already understand the kind of pattern that they're using to log their or mark their trades. So we're able to spot that, and we took advantage of it. So price pulled back as expected, you know, something like this. Okay, but sharply, something like this, but sharply. So price pulled back, and we had this bullish run. So if you look at it once again, you will notice that we have something like we have something like head and shoulder. This is the left shoulder, this is the right shoulder, and this is the head. Okay, and this is the neckline. Okay, so pay attention. So right now price is currently around the neckline area. Remember, when we have this neckline zone, you see that price came towards this neckline to make it what? To make it a support. So again, this pattern is repeating itself again. Price came down to this neckline. So the next thing we're expecting from here is what? Bull run. Pay attention. So that is another bullish signal right there. Okay, so if we zoom in, you see price has been consolidating right here, trying to trap a lot of traders, because I see some traders saying, oh, gold is going down. Gold is not going down for now, for a couple of reasons. Because there is actually a store of value. Okay, during war, people want to what? People want to store their value in gold because they don't know what is going to happen to the stock market or whatever it is. You know, a particular company can get hit by war and all of that. So one of the safest assets to invest into during war is gold. So most likely, because of this, gold price will push higher. That is fundamentally speaking. So right here, if we zoom in, let me remove this what's it called? Let me remove this target, or let me just pull it back, okay, so that we can see what's going on here. So let's zoom into smaller time frame, like let's say 1 hour. Let's see what is going on in 1 hour. Let's see what is going on 1 hour. So if we check again, this same pattern is still in play, right? Again, I'll pick from right here, then pull up, then we have this liquidity right here, then pull up. It came down a little bit again. We have this liquidity here now. You can see the liquidity clearly. Price pulled up a little bit, just like what we had here. Okay, let me show you that quickly. You see, just like what we had here, price went up, came down, then we had this pull up, build this liquidity to the downside, and we swept the liquidity. So we already built this liquidity to the downside again, and we swept the liquidity up to this low. Okay, so now this is the current state where price is right now. Okay, this is the zone where price is right now. So unlike the other movement that we've seen in the past, price usually reject very, very fast immediately after sweeping liquidity. But here is having a lot of consolidation around this area. So now this is just a setup to put traders into a state of confusion. So if you're not if you don't know what exactly you're working with, if you don't know what your strategy is actually communicating to you, you might get confused and get trapped, and you're going to lose money. So the best thing to do as a trader, if you don't understand what the chart is saying to you, the best thing to do is just to hold aloof. Keep your money in your pocket. It's also a win, instead of trying to recover your loss. Okay, but in this case, we still, based on my analysis, we still feel that gold is still bullish for now. So because we already swept liquidity to the downside, and the next thing we're expecting, based on the pattern that has been on repeat for a couple of times, so the next thing we're expecting is for gold to push up to this high, then come back towards this trend line. This trend line is very, very powerful. Okay, we're expecting a very, very nice change of character around this zone. If you can get the nice change of character in this zone, then it's a good place to buy. But the strategy I'm using right here is based on price structure, okay, market structure. So that is what I'm actually banking on. So now, based on my analysis, I'm going to add more trade from this zone. So I expect gold to go higher from this zone, because I have this trend line plotted, and already we have this break of structure to the upside. Okay, we have this break of structure to the upside, and if we check what we have here, check this move that we have here, we notice that price is actually around, sorry I'm using the full scale Fibonacci. You might not be able to see it clearly, but here is it. We have the 0.5, which is the 50%, and we also have the 0.618, which is the 61.8% of the Fibonacci retracement tool. Okay, so we heard price is currently around the 50% and 61.8% of the Fibo zone, okay, which is the discount zone, and we expect what price to buy from this area. So if and another thing is that we have this very nice order block here, although it's quite big, but we are going to take it anyway, or we wait for price to properly move into this order block and create change of character, okay, and create a change of character on lower time frame right here. But I'm going to pick this trade from here because I have confluences already. It's already bouncing on this trend line, and based on the structure, I'm also expecting a pull up. And because of the war that is going on, I once more expect what price to surge higher. So from here, I expect gold to go bullish. So from here now, gold is going what? Hop up to this zone. So if we check from here, let's try to measure the pips we're expecting. This is around 1,200 pips. So if I'm to take this trade right now, I will simply add my trade from right from here. Okay, put my stop below this order block. Okay, and this will be my first target. This zone will be my first target right here. This will be my first target, and my first target is around 1,200 pips again, and the next target will be floating up there. So like I mentioned earlier, don't expect price to just move in one stretch. Okay, price will move in waves. What I mean by waves is that it's going to create higher high and lower high. So that is how price move. So right here now, we've already create a break of structure right here, and price have moved up to this high. So the next thing we're expecting from here is for price to push higher towards the current ATH, so which is the current all-time high. So when price push up to this high, then we should expect reaction. Probably we'll see this pattern once again, something like this. Okay, we'll see this pattern once again, something like this. So this is it, guys. So carefully watch this video, share it with your friends, let them have insight on what to expect in the coming days on gold market. So if you're not following me, please subscribe to my channel, hit the notification button, and share this. Give a like, drop your comment, and share this video with your friends who are in the trading community. So let's get it, guys. See you on the next one.